Good evening. Um, it's 5:04 p.m. Sunday, and we're about to do a weekly analysis. And right after the weekly analysis, we are going to do market commentary for all the trades that we could have taken last week. It's just a breakdown of how to enter into trades, how to find zones where you should be trading in, and different other relevant things that I'm going to add in there. So let's get straight into it. Let's get straight into it. So gold was extremely bearish last week, and um, it was no surprise to me because I had forecasted this long ago. It's just that I was a bit unsure because price was still giving us, bullish momentum, especially this candle. The way it went up, you would think price wants to continue pricing higher. You understand? But it was just an engineering to sweep these highs and then sink back down, and also lure traders into thinking it's going to continue buying so that they also buy. Now, last 3 weeks, this candle took out these highs, and then if you take the fib and then you measure this level from the top here to the down here, you realize that there's a discount level here. Even no, not a discount, a premium level, and it may even, yes, it's even above the premium level. Price appears all the way above the premium level. That's above 79.00% level, and then started coming down. Now, for those who don't know about the premium and then the discounts level, it's just levels where markets perform reversals or expansions. Do you understand? So let's say there's an impulsive or engulfing bullish pattern in the price, then the market comes, retraces, comes all the way down before it continues going up. You understand? There's a level that it comes down to. Most times it stops at the equilibrium or the discount. You understand? If it gets to the discount, there's no time wasting. It just keeps flying. It just engineers itself higher and just starts flying upwards. Do you understand? So when I use these terms, they are not meant to frighten anybody. They are not meant to, they are not meant to make you think there are some huge things, or there are things that can worry you or cause you to not understand trading. So just follow me. You're going to understand what we are doing here. So it got to the premium level and sank. It sank, cleared out these lows, cleared out these lows, and then retraced back higher. Then what? This candle came in, went up small, and then came down. Notice how this candle closed. Notice how this particular candle closed. This one. What can you see? What difference can you see? Of course, I'm going to answer that alone because I'm the one here. I'm the only one here. You get it? What can you see this morning? What I can see is that the candle closed near the low of the week. What does that mean? When you see a candle close near the low or near the high of the week, right? It means that the next candle is likely going to continue pushing up or come down a little like this one and then push up. So you see this one closed near, it's not like this one that took out this high, went up small and then came down again. You understand? This particular candle went up, almost took out this high and then closed near the highest point it could get to in that week. What happened the next week? The candle opened, dig inside this candle small, and then expanded higher. You understand? Now look what happened here too. This candle closed near the week, near the lowest point it could go in the week. And then what happened? It retraced a little bit higher and then came back down with force. You can see this force, right? Exactly. This candle opened, pierced into this once more, and then came flying down. You understand? So what happened? What can you see here again? You can see that okay, this candle closed near the wick, near the lowest point it could get in that week. You can see that, right? So what does this tell us? It's either the next week candle is going to open, go above small, and then come all the way down, or open and go downwards, take out this low, and go downwards, take out this low, and then trace higher, maybe to fill in this fair value gap. For that one, we can't tell because price has not given us any clue yet. But for the coming week, I am bearish. I am expecting bearish prices. I'm supposed to see bearish. I say I'm supposed to see. I'm waiting for bearish prices because price has done a lot of consolidation here. It has broken structure. It has retraced, and then what happened immediately after retracement? It came all the way down. Now, if you measure this expansion downwards, you see that the retracement into this zone. So let me show you something. Boom, 50%. You understand? When we are waiting for a retracement into a premium level or a discount level, we consider the levels from 50% all the way to 79%. Immediately price pierces into 50% level, right? Here's what you can do. Immediately price, I got distracted. I started looking at someone. Immediately price gets to 50% level, you can start putting in your orders. You understand? Not your full orders. Just maybe if your overall orders are 5, maybe just input 2. Do you get it? Then when price comes down small, you do what? You continue adding your orders. But the reason for that is that so that when price goes all the way to 62 or all the way to 79, you don't have a lot of money in drawdown. You have just small. So when price gets to this level, then you can add your full orders. Maybe you can add the remaining 3. Or if it is 4, you trade 2 at 50%, you trade 2 at discount level or premium level. Do you understand? So you see that price posted a symmetrical price swing downwards. This same swing that happened here is the same thing that happened here. So now this same swing got pasted down. You understand? So that will be it for the daily. Now, for the coming week, this is what price did the previous week. So I'm not looking for price to go beyond this high. You understand? I'm looking for it to, either take here, pierce down, or come all the way to take out this high, enter this Fibonacci, this fair value gap, and then we'll start seeing what drops in price. Do you understand? I'm extremely bearish for the coming week, but then let's go to the weekly so I show you what I'm talking about. This is the weekly. You see, this is the weekly. This is what the weekly did. So I know that the next week is definitely going to stay in the range of this one. It's not going to want to come all the way up here to pierce above this high and before trading downwards or again. And after it has already done that over here, it came all the way to the premium level before coming down. You see, I really didn't budget for people to come here today. Seen a lot of noise in what I'm doing. You see, so we can also expect price to come all the way here. Since this has already happened, we can start measuring from here. You understand? This is the high that took out this low, and then this is the high that did all this rundown. So we can start measuring from here. Price can get all the way. I believe price is going to get somewhere here. That's if it is retracing. But if it is going to continue its movement downwards, then there's no telling to how long it can go down. You understand? Gold has its way of moving. You get it? So if it's going to retrace, it's going to either get here and fall or get in this 50% level, take out this high. You understand? Before falling. Going forward, 4 hour. Thank you very much. So the 4 hour is just giving us internal range liquidity points. You get it? So internal range liquidity points. These are the old highs that can be found in the price run that came down. The movement downwards, the movement downwards. These are the highs that we can find inside. So when we are expecting high prices, all we are saying is that we want price to count for some sort of internal range liquidity. That can be in the form of fair value gaps or other blocks or old highs and old lows. You have I've been saying a lot of rebuffs recently, Charlie. You get it? So that'll be it. I'll be looking for price to either gap all the way down or come back up for internal range liquidity and then imbalances in price before going back down. But my ultimate bias for this week is bearish. I'm going to look for bearish setups. I'm going to cook bearish setups. For example, if price comes all the way and then clear these highs, I'm going to cook a bearish setup and chase price all the way down here. You get it? And that would be because price has taken out a previous high. The next video I'm coming to do after this one, right? You understand why I would enter if price takes out that high is because when we are in a bearish market and we have bearish momentum and price is moving in a bearish order, what we look for is for price to retrace into bullish, sorry, uh, bearish imbalances. That's bearish fair value gaps or swing highs or old highs, intermediate highs. You understand? Short-term highs. So extremely bearish. But as to the way I'm going to enter, I'll leave the coming week to give me clues on how to do that. You get it? That's what we wait for before we perform. You get it? So the bias is bearish. It's either going to open, expand downwards, take out this low before retracing, or it's going to open, retrace upwards, get into some PDRA before coming back down. You get it? So this range from 5047.09 down onto 4047, 4479.25. That's the range I'll be looking to trade in. You get it? So yes. Next pair. Okay, so for BTC USD, I initially forecasted price is going to come all the way to this fair value gap. Yeah, this fair value gap. Yeah, yeah. Okay. Are you about to leave? Oh. So I initially forecasted that price is going to get to this level, sweep out these highs, then continue its run down. You understand? But there's something I'm seeing. You see, this low, from this low to, there's not even an imbalance. You understand? So the reason why I'm saying that is that um I feel like, no, I don't feel like, I think price has closed in the imbalance. So it doesn't have to come all the way up here to take out this liquidity. Do you get it? It has worked all the way up, taking out, it has closed in on the imbalance, fair value gap. You understand? So I think it's a right thing for price to do if it goes down. However, we cannot conclude on this. You get it? We cannot conclude on this. We can only wait for price to give us clues. You get it? But it doesn't stop me from thinking it doesn't stop me from being bearish on BTC USD. As you can see over here, price has cleared out these highs and then it is showing momentum to want to go down. You understand? And we can also see something like this. Price builds capacity and then goes up. That's a fast sweep over here. You understand? Before coming down. Yes, we've thought through how we are going to remove ourselves from the position of that high because we've seen price closing on the imbalance. However, we know that price can do a lot of um, a lot of amazing things, you understand? So just wait for price to give us more clues. However, if that doesn't come, I still believe price is going to go the way down. XAGUSD follows the pattern of gold. So if you can see gold prices going down, that means you can expect XAGUSD price to go down. The level to which is going to go down, I cannot tell right now, but I think if it's going to see any major bounce in price anytime soon, right? If price is going to see any major bounce back up, it's going to be around this level, because this level would have had a lot of support line around here in retail weights. Wow. So yes, price for the coming week on XAGUSD2, the market will open, gap downwards, take out this low, take out this low, maybe do some, run up into this level, take out some. Let me see if there are some highs that price would want. Okay, relax. Okay, so for XAGUSD, this is what I think may happen. If price does not go all the way, gap all the way down and take out these lows, this one and this one, then it's possibly going to go all the way up, take out these highs, major on this other block, and then continue its run downwards. You understand? So that's all we can expect from XAGUSD. It moves similarly. It moves in there's a specific word I want to use, but it's not coming. They move similarly, you understand? So if you hear prices on XAUUSD are going to drop, expect a drop in prices for XAGUSD as well. Okay. So for GBPUSD, I've not been able to give a correct analysis on it. Not like a correct analysis, but then a precise analysis as I've always used to. You get it? And because there are certain levels in the GBP USD price chart that I cannot discern very, very clearly. Oh my God, I didn't budget for a lot of dollars. Yeah. So we've seen price come all the way down, take out these internal range liquidities. Um take out these lows, one, two, three. That's not taking this out yet. And then it starts ranging, you understand? And then it does a high pump, a large pump in price. This is trying to make us know that price is likely going to, you know, do a new run up. See, it has breaking this structure. You understand? But we also have an understanding that we cannot just jump into price. Um we have to have more clues as to what price is trying to do before we can jump into it. I'm also seeing a swing low here. That's two swing lows forming. There's even one here, but we'll use this one. That's two swing lows forming right beside one swing low, which is lower than both of them. You understand? So this and then there's an impulsive run up high. You get it? So all we can do for GBP USD is that we'll wait to see what the next week brings to us, and then we'll start looking for trading opportunities from there. So that'll be all for today's market analysis, and see you next week. Have a wonderful week trading and a wonderful week, a profitable week, fruitful week, and a blessed week. See you next weekend and good luck and good trading.